different companies had different performances laid out in quarter 1, and the conversation or the hypothesis about what would happen in the quarters ahead was also very, very varied. What are you saying after the very strong performance that you put out in quarter 1?
So good morning, Neeraj, and thanks for giving us this opportunity to give you maybe nuts and bolts of our performance of quarter and maybe an outlook of how we see things panning out to the next 9 months to start with. So like you said, very good performance in terms of top line. In terms of margin, we have now come close to almost the bigger companies, even though we have been saying that our guidance is something between 22 to 24%. We seem to have been beating that number for the last 8 quarters with good reasons. But we still believe that on the margin front, I would like to stay within the margin bracket of 22 to 24%. So that's on the margin side. So obviously, if you look at the guidance and the performance, there has been an outperformance. As far as revenue growth, we've been consistently showing a decent level of revenue growth, and it's largely been led by the markets of US, Europe, and India for us, along with certain other pockets of strength. The question that has been rattling the market has been what happens when weakness sets into US or Europe, and they are seeing that, which is obviously the macroeconomic factors are showing certain weaknesses, kind of a thing. So the question was, all IT companies, we were put on the floor, if I can use that term, asking how do you guys see yourselves different? So we were kind of getting prepared to answer that. So start of the last quarter, or this quarter, what we did is before the call, after the results, the teams, which is the 3 BU heads, met customers, which is obviously something that they've started doing after the COVID pandemic, and travel had been brought to almost a stop. Now, meeting customers, getting a first-hand feeling, they communicated it back to us, the finance guys who put out a number saying that, hey, you know what, we are looking at decent amount of growth. There is strength in the market in pockets where we are working, especially because we are digital. We're not seeing any weakness or any postponement kind of project on projects. So having done the growth that we did in Q1, then we had to take a view of how the next 9 months would be. And as you know, in the endless call, we put all of that together and said that we are upping our guidance to 25% for the current year. And we are also making sure that we would like to grow at a similar number for the next 5 years so that we can reach that aspirational number of $1 billion in 10 years by 2031. So these two statements were made. One is upping the guidance, which I think was taken positively by the market. Second is the logic for why we did that. Like I briefly explained, but Joseph, being in touch with customers' markets, will be able to give you a lot more better view and handle on that. The third thing is, we also took away the differentiation. Earlier, we did say that we will grow at 20% organically year over year. But right now, what we said is we took that out, that organic part, and we said we'll do 25% growth. Because markets were not kind of understanding, if you do 20%, how do you reach $1 billion? Then, I had to say that there would be certain acquisitions which would also then grow, and that's how we reached $1 billion. Then I think the analyst community and the investor community came back and said, divvying up growth into parts like this may be a little confusing. So what's that you guys want to grow at? So then that's when we went back to the drawing board. Having done the 30+% in the first quarter, the confidence of what we will do in the future, we put our neck out and said we'll do 25% growth this year. But the caveat being, I don't have any opportunity of acquisition, or at least I've not notified the markets immediately of anything. So effectively, the next 9 months growth that has to come will come organically. So it's a 25% organic growth is what we are gunning for, and that's where we are headed. All this has gone maybe positively, has come as a breath of fresh air, amongst obviously the supply chain challenges and all of that, amongst the investor community and the shareholders, and which is what you have seen as a market. I think I've given you an overview. Now, Joseph will be able to add a lot more of meat around that.
Yeah, I'd like to take part credit for this change in guidance, because if you remember, Venkat, 2 quarters ago, at the last question, we complained to you that, why is it that you are undershooting what you guys do. I can mention that, okay, we take on board some of that as well. I'm just kidding.
I know. No, I know. You did say that, and which is what one of the inputs that we took back, saying that yes, analysts are pushing back. People who follow us, track us closely, are asking the same. So maybe we need to put out a more, I think, a computed number with the kind of comfort.